Good evening to all of my dear students. That can you hear me? No? Can you hear? Okay.
Yes, sir. Yes, sir. We
Good
can
evening
hear.
once again to all of you, my dear students. That now the advanced level examination is scheduled to be held on next month, I think February. That entire grade 12 and 13 you at home, I think that no? All courses were done, classes and other lectures sessions have done online. I think. We know that online is may not be much effective than the with compare that on-site classes, that physical classes. That anyhow, I hope that already you have completed your syllabus now by now. That and then that's why we also thought to sharing some topics to discuss few important topics to share and discuss as a support to you for your coming examination. That although you are not having that proper physical classes, if you work some extent, yes, if you have worked some extent, then only thing is you need that confidence to face the examination. Then you will be success. That's why you also supporting you to make your examination success. Then at the beginning itself, I wish all the best for all of you that I for your coming examination. So there's a one chat box message that I read it. Huh? Okay. Then accordingly, we shared few topics, and one topic which I got to discuss is project evaluation. When you work that previous past papers, that every year one questions come from this topic. That right? Those who are I think already you have studied this topic and you have covered that, you have done that past papers. In that experience, you know every year one questions come from this topic. That right? Then if I ask that, have you done this topic already? Better you talk with me, yeah? I would like to welcome your voice. That don't worry that. Ko putala kata කරන්න. Right? මේ කතා කරන්නද? නේද? මම මේ ආසයි කතා කරන්න. Right? Rather than sending that message through chat box. That actually that A-level student practice is that even at the private, their classes, they may supporting classes, you mainly send that chit, no? There are chit in here chat. Right? But I would like to hear your voice. That if any question, anything, any clarification, you are welcome to ask any question, anything at any time. Okay. Then this topic is much important for the examination point of view. That therefore, I hope to summarize this topic, important point of this topic, project evaluation, right, within this given 2 hours period. Before we come to that, some questions to discuss, that examples to discuss, that as a brief introduction to project or investment, then I can broadly categorize under 2 things. That one is investment in long-term project, that is called investment in fixed asset, or that is capital budgeting part. That commonly we call that capital budgeting part, project evaluation. No? Other part is investment in short-term asset. Investment in short-term asset. That is covered under working capital management. But the second point does not cover in our syllabus, that A-level syllabus. That. In business studies subject, I think some points are working capital management. But here for the accounting paper, it doesn't cover in our accounting syllabus. That. Only capital budgeting, project evaluation component comes there. But to get brief idea about different type of investment broadly, investment in long-term projects for fixed asset, which is called capital budgeting, covered under capital budgeting. Other one is short-term investment, that mainly covered under working capital topics. The other. From here we take only first point to discuss, that capital budgeting topic. That. And that also we take only evaluation part. That. Then if I a simple question, what is a project? That is, you all are having good experience. Heard that word project report. Project. What is a project? It's a given task. That it's a given task or undertaking. That. Especially one involved in considerable amount of more important word is input and output. That is, any project involved with inputs and output. That it's a task. That project means a task. That you know these days that project, the highway project, that is construction of bridge. It's a project. That it includes inputs and also there's output. That input means it may be in terms of money, labor, or other equipment, whatever things that input. That output is production of that. If you take an investment in machine, that or asset, output is production of that. No? That any project involved with that input and output, that it is a project. That means also that every project has different components or activities. That or is say that first is step, second is step. First different activities involve that. Yes, one is want to ask a question. Yes, you can ask that. Yes, please. That host has muted. I will give call. I will ask that. Excuse me. I will call and I will ask that. But I will call that organizers. Huh? Can't speak. The host have muted us. I didn't check that. Huh?
Yes, sir. Tell me.
Now, okay?
Yeah. Yes, sir. Tell me.
Now, the student saying that can't speak. The host have muted us.
Right. I will unmute them.
Okay, that's fine. That's fine.
Yeah.
No?
If
okay.
anyone wants to speak, they can. Yeah. Sure. Thanks, sir.
Okay. Okay. Right. Now it will be okay. Yeah. Right.
Yeah. Now it's okay. Sir.
Okay.
Yeah. If anyone wants to speak, they can speak. Yeah. Thanks.
Yes. Right. We are here that every project has different components, as I told. Completion period is relatively long with compared to short-term projects. That relatively it's a large or major task. That in completion period is relatively longer than the other projects. That's why we have to evaluate properly that. Project evaluation, when we come to evaluation part, project evaluation part, assign value to different components or steps. That evaluation in the sense that there what we do, we assign value for its component, cost and benefit, identifying different cost elements and benefit that. Then we assign value. In other words, say put a value on it. Yes. By identifying cost elements and benefit elements, then we put value, monetary value on these elements. Then is possible cost and benefit items need to be identified and need to be assigned monetary value for this cost and benefit elements. Okay, right. Then most possible cost element of any project, that any project is initial investment. As we know, that initial investment is there. Right. Can't we see what you typing? That means you can't see this slide. Oh, slides are not moving.
No, sir.
Huh? No? Okay, I will stop sharing and again I will share it. Huh? Or sometimes it might be happen that. Okay, we'll share it again. Now is it okay?
Yes, sir.
Now okay, no? Right. If there's any technical errors like that, problems, please do tell me that. Please do tell me that. Sometimes it might be happen. Okay, here that. Right, viewing here that cost element. Most possible cost element, any project is initial investment is there, you know that. Working capital investment is there. Sometimes that in many cases, for our examination purpose, it may given at the same day, at the beginning of the project, working capital also introduce that or invest in that. No? Sometimes in practical scenario, it may not be in the same day that means once we purchase that purchase and install that particular machine, we say that, and working capital is need when it is start to operate that. But for our examination purposes, mainly give that at the same day, beginning of the project, this working capital also be introduced. That, or sometimes that additional investment is required after say that 2 years, 3 years. Then for the further improvement, that expansion of the project after few years. Say that total lifetime of the project, we say that 10 years. Then after 3 years period or 4 years period or after 5 years period, with that expansion, with the market demand is increased, then we need to expand our project to produce more than. Then additional investment is required. Then additional working capital is required. That kind of situation also will be there. Those are some cost elements. Those are most possible cost element of any project. Benefit, when we take that against this cost, then main benefit elements are, components are annual revenue. You know that, annual revenue, sales, or profit. Sometimes we may given that. profit or annual cash flows we are given that. Or sometimes you want to calculate that. Salvage or scrap value. This is comes only at the end of the project. No, salvage value comes only at the end of the project. That means whatever remaining of the site, remaining of the asset project, we can sell to some amount, and what is the amount we realize from the selling process of that is scrap or remaining thing. That means, right? Then other one is realization of working capital. Working capital investment. Working capital investment. According to nature of the working capital, it is assumed that whatever the working capital introduced at the beginning will be realized as it is at the end of the project. That once we introduce that, as you know, in your business management subject, that and business studies subject, then once we introduce that working capital, it may be blocked in different places. That raw material in WIP, that means work in process, like that finished goods, different places. That then at the end of the project, it's assumed that this will be realized as it is at the end of the project. That selling price of existing assets. That sometimes in case of replacement project, when new asset is installed, that existing machine need to be sold. That amount also we may take as a benefit against that investment. Right? One student asked that shall we discuss that company accounts? That so I think that topic also in your this schedule, that company account also will discuss that. This one topic we propose there, that I forgot to ask it discussing there, but according that since you asked that, it is not yet discussed. That anyhow, this is a series of this sessions. One session will be to discuss that company accounts as well. That according to topics given to me is that. Right? Therefore, if I know that, then sometimes if I know it at beginning, I was able to take that topic, company accounts topic. That, but here today I did not prepare that even example. No? So today I can't take that. Right? We'll take in future. That means within this series we'll take that one or two students asked to shift to company accounts. Thing is that I did not arrange that example. That with that example we need to discuss that. No, right? Okay, we'll take it later. Stop, and then next week, somewhere next week, we can take it. That okay. Right. Those are some possible cost and benefit elements of any project. That then why project need to be evaluated. Here I am coming step by step to take one example. That then example is covered all these things there. Before we directly come to that example, basic theoretical concept, theoretical things also I thought will be useful to you before we come to example. That right. Since that briefly I will take within few minutes. That right. Compared to high investment, it's involved in project is involved with high compared to high investment than the short-term investment. That other one is long run nature. That project it will take long time. That compared to long period. That sometimes more than 2 years, 3 years, sometimes more than 10 years like that. Also that highly risky thing that due to that long run nature, it's a risky job, that risky investment. The other one is irreversible nature. That means if that project is failed, it's not possible to recover that initial investment. That is right. Then there are mainly two types of project we can identify. One is new project and replacement project. Here we take only that new project in our syllabus, that not replacement project. So our discussion will limit to only to the new project, right? Then other one is evaluation techniques under risk-free. There are two assumptions, that risk investment and risk-free investment. In our A-level syllabus, we have a risk-free investment. Risk-free investment. To evaluate this project of risk-free investment, there are different mechanisms, different methods have been introduced. In practice, you are also study these different methods. One is payback period, other one accounting rate of return, other under discounting method we can take net present value, internal rate of return, and profitability index like that. But here in our syllabus is mainly covered only these three things: payback period, accounting rate of return, and net present value method. But frequently that net present value method is comes first. But it doesn't say that we can't guess that these, or we can eliminate these two things, that payback period and account rate of return. We cannot eliminate that. We can't give that less weight for these two methods as well. Why? This also in our syllabus. Frequently they ask that net present value method, calculate the net present value, but these two are also in our syllabus. So we can't neglect to discuss of these two methods as well, right? Then now discounting that future cash flows, that mainly under that net present value, when we take it, this present value, in order to get the present value, cash flows to be discounted. By taking there, we mainly apply that cost of capital. In your example, in your examination paper, given that discounted rate is given. But if anyone asks that, what is it mean? Is a cost of capital, or expected rate of return, or average cost of capital, we can take that. Right? With that, now payback period, time required, briefly if I take that, payback period means the time required to recover its initial investment from the cash flow and cash flows. Time required to recover its initial investment from its annual cash flow. Right? Then other one is accounting rate of return. This is calculated as a percentage net profit, as a percentage to average investment. ARR, or accounting rate of return, is calculated as a percentage to average investment, average profit compared to average investment. Right? Then, okay. Net present. When we come to net present value, there are that cash flows, cash inflows and outflows to be discounted. Cash inflows and outflows to be discounted. By taking that, as I told previously, average cost of capital of the firm, which is in your paper. Then if the present value, calculated net present value, how we get the net present value? Present value of the investment, if the present investment is higher than the present value of present value of the cash inflows is higher than the present value of cash outflows, then we say that it is a positive net present value. That it is a positive net present value. That in order to get the present value, we have to separate. We have to take the present value of cash inflows and outflows. Then ultimately, we have to compare the present value of the both these two, and difference we identify as net present value. If it is a positive one, positive in the sense that present value of the cash inflows is higher than the outflows, then it is a call that that project is profitable to make investment. Why? Net present value is positive. That. Now, one example is given. That example is given in here. Okay. This example, I try to cover that all these concepts which I briefly mentioned here. That so the theoretical part, I didn't take much time to discuss. Why? Examination, it may not be much. They may not ask that theoretical thing from here. One example is sum is given to calculate that. In previous few years, it's mainly based on the, as I told, net present value they asked that. But as I told previously again, that these two methods are the payback period, man, ARR cannot be neglected in the other. Sometimes they may ask that well, this two is much easier than the calculation of net present value. Then in that sense, sometimes this time comes that that kind of easy calculation. Then, right? Then one example is given in here. If we read it, you all can see it. I think that ABC company is considering to buy a new machine to expand its plant capacity. Right? For the sum of 1 million. That investment of this asset is 1 million. Its estimated lifetime is 5 years. That. And salvage value at the end of the project, no? Salvage value comes at the end of the project is 200,000. Additional amount of 150,000 to be invested as working capital in the at the beginning. That we assume at the beginning, okay? Then investment is 1 million. Initial investment is 1 million. That means cost of this plant is 1 million. That cost is include installation cost as well. We assume that amount paid to supplier or to company, where that means buying price and all other direct costs incurred to bring into this machine and working condition. That even installation cost as well. That then or sometimes the amount we spend to remove that previous machine installed in the other. In order to install this machine, previous old machine to be removed from that place. That cost also we take as the part of that initial investment. Covering all these things, we assume that we are given that is a 1 million. The second manufacturer's classification is useful economic life is 5 years, and 200,000 is the salvage value at the end of the lifetime of the machine. Then additional investment is 150,000 as a working capital, which is assumed to be spent or invest at the beginning of the project. Then production in terms of unit is given that. So the intention was to cover every aspect from these two examples. Then rather than giving just cash flow or net profit. Then we don't know in which aspect that examiner may ask that. Advanced level is a competitive examination. Then they may test that. In our previous experience, we know that as a marking examiners, then chief examiners, we know that. Then we our task is to select, we advise to select the best students out of this candidates. Marks to where we can allocate, even one mark will be important. That because it's a competitive, no? Right? Then we don't know in which aspect they may have given that. Sometimes they may give that annual cash flows directly, or sometimes this without giving that annual cash flow, production and selling price, you want to calculate that. That's also possible ways that. Yeah, right? Then selling price, number of units, estimated production in terms of unit, we are given in here that selling price per unit is 1,500 for the first and second year. Then third year onwards, third year, fourth and fifth year, it will be increased by 20% that, right? Prime cost per unit is 800 for first and second year due to fluctuation, inflation impact, increase of material cost and labor cost. The prime cost, that primary cost, that prime cost, this primary cost will also be increased that. One is asked that question, say that only initial investment is given and no scrap value, means what should we take as the average investment then? Then I will come to that point. All these things we can discuss in here, that right? Right, we will take it now. Right. Then primary cost will be increased in here by 15%. Third year onward, third, fourth, and fifth year. Annual overhead cost including depreciation is 260,000. Expected rate of return of the company is 12%. It says that ignore tax. All aspects covered in here. Right? Then again, the discounting factors for the 1 to 5th year, respectively. 2 decimal only you are given here, only 2 decimal. That's enough for our examination purpose. That if 3 decimal is given in examination paper, better you have to apply that on the decimal points. That here for easy purpose I give only 2 points. 0.89, 0.8, 0.71, 0.64, and 0.57. That you are required to calculate IRR, payback period, and annual cash inflows and outflows, and net cash flows, and so whether it's advisable to buy this machine based on calculation should be based on net present value. That net present value. Okay. So give an example. Are you familiar? If you are given this kind of example, you frank to tell me, can you work out this? Then now your time. That I will give 2 minutes time. Right? Can you work out this? You are familiar with this kind of example, right? Right? Any language you can use that. Either single English that. Are you competent with this kind of example to do? Well, can right? One says yes. Right. Right. Some says yes. Huh? Someone is still silent. That okay. We'll see that. We'll see that. Then answer, I work out that answer since it will take time otherwise. So I calculate answer is given here. That say in terms of here figures are given in rupees 1,000. Sales values are given in here. That I calculated, not given, calculated. How I got it? So 400 units into 1,500, 500 units into 1,500. Then after that, that 500 units, 600 units, then other 600 units into 1,500 into 20%. It's 1,800. Then 1,800. Then 1,800 into 500, 1,800 into 600. Then 1,800 into 600. Then selling values. Sales values are calculated in here. That's the way we are calculating sales value. You know that. Then prime cost. Prime cost in first 2 years it is 800 into 400. Then 800 into 500. Then it will be increased by 15%. That 800 into 15%. Yes. 800 into 15% means how much? 920. 800 into 15%, that 150%, 15%, 920. Then 920 into 500, 600 and 600. Then is a prime cost we calculated here. Then overhead cost, total overhead cost is 260,000, including depreciation. Then net profit for the period we can take. As I mentioned in one of the previous slides, that how we calculate ARR, average profit to be divided by average investment. Average profit divided by average investment. Now here I calculate depreciation since it will be useful for the next slide, next topic. Then how we if we discuss in here how we calculate depreciation, that 100,000 or 1 million is the value of the asset and its scrap value is 200,000. Then it's 800,000 is the depreciable amount. Depreciable amount is 800. Always useful economic life. If you apply that 5 years, then it is 164 per year. The annual depreciation is 160. Then average profit. How we take that average profit? Annual profit. Here no taxation is given. If no taxation, we are given that 20 plus 90 plus 80 plus 268 plus again 268 plus means that 826 a total profit during this given period of 5 years. During the given period of 5 years, it is 826,000. 5 number of years, expected useful life is 5 years. Then is a divided by 5 means 165.2. 165.2 that per year. That right. Then average investment is equal. How we calculate? This also I gave in the previous one of the previous slides, that initial investment plus salvage value. One asks that when there's no salvage value, how we usually calculate that average beginning of the amount plus at the end of the year amount divided by 2. That means in order to get the normal average amount in general. Then when there is no salvage value, then initial investment is 1 million plus 0 divided by 2. Again 1 million divided by 2. When there is no salvage value. When there is a salvage value, should be add 1,200 plus 1 million plus 200 divided by 2 is 600. Then this average investment. Then someone asks question, we say that. Total profit is 726. If so, we'll take that. We'll see that. We'll see that 20 plus 90, 80, 268 plus 268. Yes, 726. So we take that here 726. Okay, No problem. 726. 726. You are correct. Divided by 5. It says that you are having an idea about how to nail. And you are participating to lesson. You are careful. Listen to that. Then 145.2 is the average profit. That. Okay, 145. 145.2. Okay. Then how should we take this sales value? Sales value, how we got that? Though I show that working. Third day, I can't understand what the third day saying that. Then here sales value, you got that. Sales unit is given in here, that in terms of unit, 400, 500, like that units are given, into unit price is given. 400 into 1,500. 500 into 1,500. Then hereafter, from third year onwards, it is increased by 20%. That means selling price per unit will be increased up to 1,800 here. Third year onwards, that. The 5,500 into 1,800 is 900,000. 600 into 1,800 means 1,080,000. Fifth year also same. 600 into 1,800 is 1,080,000. Overhead, someone asked that overhead depreciation to be deducted like that. Then here that overhead I deducted both together in here. Both together I deducted from here. That okay. Separately also you can deduct that. It is given in including depreciation. So I take together in overhead cost here only 100. That means overhead only 100. That. Yes, there's typing mistake. I think that means here 460 overhead cost, prime cost. Say that 900. My previous answer is someone says correct that, but I did not check that. No, one by one. Say that 60 minus 260. Yes. Here's typing mistake in here. It should be 160, 80, 180, then 826. My previous one is okay. That's right. Previous answer is okay. 165. Right. Those are some typing mistake in here. That right. Then okay. Now how to calculate that average investment is clear. I think you okay. Right. Someone asked the prime cost. That meaning of prime cost. Meaning of prime cost. That prime cost in the accounting subject, you know that the primary cost, that total of direct cost. That no. When we take that direct cost, what include in the other direct labor and direct material, direct labor and other direct expenses. Right? Direct material, direct labor and other direct expenses. Total is equal as prime cost. No. That I think I assume that you know that part. You have discussed that prime cost. Primary cost people. Prime cost means primary cost. That in single we call that Prathamika period. Yes. Prime cost is 100 total of that three. Direct material, direct labor, and the other direct expenses. Then other than overhead cost. Overhead cost here, what's the overhead cost which cannot be convenient identified for the production of particular cost centers, cost unit to cost centers. prime cost is the cost, or primary cost is the cost which can be conveniently identified for the particular cost unit or cost centers. That overhead cost is the cost which cannot be conveniently identified for the particular cost unit or cost centers. That's a brief idea, meaning of that prime cost and overhead cost. No, right. Then here we may not take that as a part of that. What do you think about that? When we take that investment, is it need to take that working capital? Working capital. Working capital. We may not take that. Why? We assume that initial investment only we take that, with that payback period formula. How we take that initial investment divided by annual cash flows. Annual cash flows. Annual cash flows. Annual cash flows. Though not in not that formula can be applied annual cash flows annuity form. That annuity form means that if that annual cash flows are in same amount, that in every year throughout the project life, that say that every year is 100,000, 100,000, 100,000. Very convenient equation, that means formula. That initial investment divided by that is comes a payback period. Okay, right. Yes, always ARR, when we calculate ARR, average profit divided by average investment into 100. Okay, I got that other slides. Okay. Then here, as we calculate the average profit period is 165.2, where the average investment is 600, as a percentage is 27.5. That means 27.5. Average profit divided by average investment. Right? Some other one is asked that salvage value need to take at the end of the year. Yeah, that and when we take that net present value, definitely we have to take that. Scrap value and realization of working capital, we have to take that. But here that much of time may not be taken, so that's why we didn't take it. Okay. Here anyhow we need only that net profit. No, when we calculate that net profit, we may not take that salvage value as a profit. No, when we calculate that cash flows, only we take that salvage value and working capital investment at the end of the year. That at the end of the project life. That at the end, in this example, at the end of the 5th year. That right. That's about how to calculate average ARR. How to calculate that ARR. That we comparing average profit and average investment, accounting rate of return. That means anything you can ask that. Okay, right. 160 depreciation comes out that initial investment is 1 million minus scrap value 200, then 800 is a depreciable amount. That means depreciable amount divided by 5 years. That lifetime is 5 years. That 800 divided by 5. That okay, right. So initial investment only we take that. Right? 160 we no need in here. The next example only we need that. Anyhow, I calculated here since the example is given in here. working capital investment we may not take as a part of the investment, initial investment. Why? According to nature of the working capital, according to nature of the working capital, right? Nature of the working capital is circular. Once we invest that working capital in here, it's blocked in different step. Here we say that raw material. Right? Some amount is in here raw material. Again, some amount in here as labor expenses, or some amount in the WIP, work in progress, that means. And some amount in that finished goods, that, right? Then again, that debtors in credit sales, that, and again it will realize to here, and same amount will be circulated throughout the project life, that. And when at the end of the period, once we stop that project in here, it's assumed that that amount will be realized as it is, that. Once we sell that remaining material or WIP or whatever is blocked in these different places, that. Once we collect that debtors amount, once we sold that inventories, once we sold that WIP, then the same amount, more or less same amount will be realized at the end of the project lifetime. Therefore, this working capital as a principle, this working capital may not take as a part of the initial investment. Though it is invested in at the beginning of the period, it may not take as a part of the investment. Okay, right. That's the point why we are not taking this working capital as part of the investment. When we take that, one other is asking how we take that average investment. That average in initial investment is 1 million here. Initial investment is 1 million. Salvage value is 200,000. 200,000. How we normally calculate that the average at the beginning of the year amount? Right? Say that 100. At the end of the year, we say that 20. Then divided by 2, that. You also same that. Don't deduct that amount. Don't deduct this salvage amount. Right? Initial investment plus salvage value divided by 2. That's 100,000 plus 200,000, not 100, 1 million plus 200,000 divided by 2. That 1.2 million divided by 2 is 600,000. That's the way we calculate average investment. Right. Okay. Right. Okay. Likewise, if you have any question, you can ask that, right? No worries that. Then I think here up to here, okay, I think, no? We don't know which point they may ask for the examination. Sometimes they may ask even simple, this kind of point that. This time, since you had learned through that online mainly, sometimes they may not go for the difficult example, that. We don't know that, huh? Don't depend always on like that. We don't know. Right. Then other one is payback period. This also covered in your syllabus. That's why I take mainly to discuss these 3 points. That accounting rate of return, payback period, and net present value method. Then, okay, right. How we take that net present value, sorry, payback period. Here that payback period in my previous one of the slides, I explained that. That means time required to recover its initial investment from its cash flows, annual cash flows. That is time required to calculate. Time required to recover initial investment from its cash flows. Okay, right. Then here we have to calculate that cash flows in that point. If we take from the previous point, that previous slide, right? annual profit, net profit we calculate 20, 90. Here it is okay that no typing mistake in here. 880, 286, and this one. Right? Then depreciation. We have to add back that this previously we deducted that. No, when we take this 20, 90, 80, 268 like that, we deducted overhead cost plus depreciation for 260. That's why I calculate 206 depreciation in previous slide, since it is useful in here that. Since it is useful in here. Then we have to add back that depreciation because this is not the expenses that needs. This is not the expenses. It's just only book entry. That depreciation is only a book entry. Then add back 160 to be that. Then then cash flows here 180, 250, 340, 428, 428. Right? If we need that, we can take that working capital and definitely we have to take that net present, as I told that net present value calculate, then we have to take that scrap value and working capital to here that working capital, right? Scrap value and working capital. But here, since we are able to recover, no need to wait until end of the project to recover that. That's why I eliminate these things to eliminating this unnecessary capital for this example. But for the net present value, we need to take the salvage value and working capital as a part of the cash flows. That okay. Then cumulative cash flow is 180, 230, 430, 700. How you got that? 180 plus 250 is 430. Then 430 plus 340 is 770. Then 770 plus 128 is 1198. Then 1198 plus 428 is 1626. Then right. Then okay. Then how we calculate it? Calculate, as I told you how to calculate it. Okay. How to calculate it? Initial investment divided by annual cash flows. Initial investment divided by annual cash flows. Then annual cash flows. This can be applied if our cash flows in annuity form. But in our cash flows and mixed stream, that can be not in annuity form. And if it is annuity form, in every year either 180 or to 430 throughout the period should be the same amount. But here it is in mixed stream. That is in mixed stream. That first year 180, second year 430, third year 770, others fourth year 1100. 180 to 150, 340, 420, like that. Not in the same way, the mixed stream. That mixed stream. That's why we take that different way. That then total of when we take that cumulative, our total amount we have recovered is 1 million. That is 1 million to be recovered. That. When we come at the end of the third year, we'll be able to recover how much? 770. 170. Then remaining amount to be recovered from the fourth year is 230. 230 to be recovered from the third year cash flows, right? The third year cash flows are 428. Yes. So no need to wait until end of the fourth year to recover in a total or initial investment of this project. That means we can recover that initial investment after 3 years, but before end of the fourth year. In between this third year and fourth year, we'll be able to recover initial investment from its annual cash flows. Right? Then how we calculate how many months it will take? 3 years to complete, 3 years it will take that. Complete 3 years it will take that. How many months it will take that? How many months that? Then 3 years plus some other few months. No? Then 230 to be recovered from the 428 of total of cash flows of fourth year. Then. Fourth year cash flows are is 428. That means from that out of that 428, we have recover only 230 to recover total investment. Then. Then how long it will take that? How many months it will take that? Then how to calculate this? 230 divided by 428 into 12. Then it will take 6 months, 6.4 months. Then 6.4 months. So we conclude that as a 3 years and 6 months. 6 years, 3 years and 6 months will take totally to recover that initial investment from the project cash flows. Project cash flows. That is payback period. That also possible to get this kind of question for your examination. That okay, right. Next one is that net present value. It frequently comes is net present value calculation. That so it will take after a few minutes break. That right. It will take. I will take this one. This is one of the most important things here. Every year you may get that kind of question. That right. So it will take it after break. Okay. Thank you very much. Hope to meet again around 8:20. Right. Okay.
Thank you very much, sir.
Okay.
Thank you very much, sir. It was a great explanation. I think this is one of the very important chapter in the syllabus. So I hope the students are getting the benefit out of it. So this entire seminar series, it is sponsored by Premier Partners, which is the education institute which provides ACCA qualification. So from the institute, I'm inviting Mr. Zian that they provide. Zian, over to you.
Hi, everyone. Hello, everyone. First and foremost, can you all hear me? Can you all see me? Everyone, can you all see me? Can you all hear me? Hello.
Yes, you can hear.
Thank you, sir. Thank you very much, sir.
Right. You should not talk in that. No? That's right.
All right. Brilliant. Good evening, everyone. A very warm welcome to the session. First of all, to introduce me, I'm Zian. I'm the CEO of Premier Partners Institute of Management, which is the main sponsor for all the seminars that is being conducted throughout. Firstly, I think it is very important that I have to extend my appreciation and be very grateful for all the support given by the professors, including Bandara sir, and also Shihan, for bringing this value addition to all these students close to the exams and making their life much more easier. Thank you, everyone. Probably all of you are pretty confused now. Probably you're confused. Okay, fine. The seminar was going well, and I see someone new coming here. What is he about? What is he going to talk about? Yes, everyone, you're a bit confused, aren't you? We have to interact, right? We have to interact, right? So you're going to be the future CEOs. You're going to be the future directors of companies. You have to talk. It is very important that you have to talk. Yes. Hello. All right, I know you're a bit confused. You are a bit confused as to why did he come in between. All right, guys, there's something that I want to tell you, right? Right now, you are in one of the most important stages of your life. With about few days for you to sit for your A-level exams, right? You've got about few days for you to sit for your A-level exams. You are in a very, very important stage of your life. Some of you are wondering, okay, fine. I'm going to finish my A-levels. The very next thing I'm going to do is I'm going to talk to my parents. Right now, I've studied for the last 12 years. I'm going to get married. Yeah? Some of you are there in that mindset. Yes, you can marry, you can have girlfriends, everything is fine. But there is also something that you have to do. You have to make a decision in your life. What is this decision that I'm talking about? You have to definitely make a decision as to where you are going to be in about few years' time, in about 5 years' time. The decision I made about 7 years ago made me become a CEO of Premier Partners at the age of 25. The decision that you are going to make today will definitely have an impact on what you are going to become in about 7 years' time, about 8 years' time. Definitely, yes, guys, that will have an impact in your life. You're right after A-levels. You're waiting for your results. What's next? What are you going to do? Do you know if I tell you that the world is waiting for you? The world is waiting for you. There are so much of opportunities in the world. You got to make sure that right now is the time for you to make decisions in order to make or break your career. You're going to make a decision. The decision that you make today will determine what you are going to become in about 5 years' time, in about 7 years' time. Definitely, yes. And what is the decision that you are going to make? That is very, very, very important. You are going to decide, all of you can see my screen, yeah? You are going to decide what you want to become in about 7 years' time. Are you going to work for someone? Are you going to take up admin related roles? Or are you going to lead a company? Are you going to go high the hierarchy and lead a company, make decisions, put up strategies within a company? That is the decision that you're going to make today, everyone. That decision comes right after your A-levels. It is very important where you are going to place yourself. Are you going to place yourself lower the hierarchy or higher the hierarchy? Everyone, lower or higher? You want to keep yourself high, aren't you? You want to lead companies. You want to be the next CEOs. You want to be the next set of directors, CFOs, CEOs of companies. Shouldn't you? Yes. And what if I tell you, being a CEO, being a director of companies is very easy if you choose ACCA. And when I say choose ACCA and discover a world of opportunities, I am going to prove you today what is this world of opportunities that I'm talking about. You have millions of opportunities with ACCA. And first of all, you're pretty confused what ACCA is. In the world, ACCA is the largest and fastest growing professional accountants body in the world with more than 117 years of expertise. We have a history of 117 years. We have been building accountants and future forward thinking professionals. ACCA has over 233,000 members and 536,000 future members recognized over 178 countries. When I say 179 countries, guys, if you go across the entire world to 178 countries, and the moment you say you are ACCA, you are respected. You are respected. And when I say a world of opportunity, right? When I say a world of opportunity, I can show you a little example. Let's say you're ACCA qualified and you want a job, right? You want a job. You have a varieties of jobs for you. I know you don't simply trust what I say. So today, what I also have for you is simply what are the job opportunities that ACCA will have for you, right? If you can see my screen, right? If you go to the ACCA global website, right? The ACCA website, today, as of now, you've got so many opportunities in the UK, in the Europe, Asia, Africa, be it digital, be it internship, be it America, China, or Middle East, wherever you want to go in the world, you are employed. For example, if you look here, you can Browse jobs by job role or the sector you want to do. You can become an accountant, you can get into banking, you can get into defense, you can get into energy, digital, healthcare, wherever you want, because you have to agree with me, accountants are required in every sector of the world. How easy life is with ACCA. When I say a world of opportunity, this is what I mean. Wherever you go in the world, you are demanded. And you can simply apply for your jobs right here. Let's say you want to apply as a CFO of a company. Simply you apply the CFO position. And wherever you want, you can just simply add your CV. You've got jobs in Amazon. You've got jobs wherever you go in the world. And that is what ACCA is about. ACCA is about giving you opportunities to go across the world. It is the largest accounting finance profession. When I say largest, probably you go for an interview, the person who is going to interview you can be an ACCA accountant. Right? Perfect. Let's go further. So you choose ACCA, you discover a world of opportunities. Wherever you go, you are employed. That is very, very important. That makes your career, right? That makes your career. And if you ask me, right, few of our students, ACCA students, where they work, they don't work in little places. They work in Rolls-Royce. You know Rolls-Royce, right? They work in Rolls-Royce. They work in American Express. They work in Standard Chartered. They don't work at the lower tier. They work at the higher tier. And whoever chooses ACCA, they go right to the top. That's what we call it, the ACCA professionals get the C-suite. C-suite means you become a CFO, you become a CEO, you become a COO. And that's where ACCA is going to take you. ACCA is going to take you right to the top, where you make decisions, strategic decisions, and you are not going to be on the bottom. If I have to tell you, right, certain people who have achieved really well in Sri Lanka and across the world, I can definitely show you, right? People from Sri Lanka who have dominated the world just with ACCA. Dr. Jinusha, Kaushik, Brinda, and all these are few of the many who's been across the world and been massively successful. And I know, to make it more clear, what I've done is I have bought one of our ACCA ambassadors who's in Dubai right now to talk to you. Kaushik Sirikanda is an ACCA ambassador who's been a successful person with ACCA, who's placed himself in the bid list right now. Kaushik, over to you to share a few words about ACCA.
Thank you so much, Sian. Hope everyone can hear me. Yes?
Yes, we can hear you, Kaushik.
Okay, thank you so much. Thanks for inviting me, and already Zian discussed so many things about ACCA, so I don't need to brief anything about ACCA. I will share my personal experience. My name is Kaushik. I studied in a government school in Jaffna, and I started my ACCA in my 18, just after my A-level, and I moved to Colombo just to study ACCA. That was I did commerce in A-level. After my A-level exam, I moved to Colombo. After that, when I was doing foundation, we studied in Tamil medium, so I cannot speak much English, and I cannot write properly in English. So I struggle a lot, but luckily ACCA, like in a second level, the written papers, they don't much bother about the grammar. If we are giving the answer, they are happy with us. Like, that's the best thing in ACCA, because I worried so much. It's a UK qualification. We should have a solid foundation in English, but they expected accounting and finance from us, not the English. So that was one of the main thing I should share about ACCA. After that, I joined with KPMG Sri Lanka. So I joined with the audit division. And while doing my ACCA, I was I became a supervisor in the audit division, and I struggle a lot, obviously, in ACCA, but the lessons, subject I learned, it's directly helped to my career. After that, this is the flexibility in ACCA. So once I became a supervisor and I decided, okay, with this accounting knowledge, I should add IT in my background. So I decided to do IT degree, and I joined with IT audit division. So which is a combination of IT and accounting. So I was highly recognized in the IT audit division because I'm a person know IT as well as accounting, because I studied since my school. I studied accounting and I studied IT as well, so I can bring both into the audit field, and I renovate my career as a IT auditor. So there I recognize highly from compared to people coming from IT background, purely software engineering or engineers, network engineers. They have been in my department, but I recognize separately because of I had ACCA. Then once I completed my ACCA, once I become my ACCA member, I just one day I opened my LinkedIn account and I got a message from one of the director in KPMG Dubai, and he asked me to come to KPMG Dubai and join. So while the time I was working at KPMG around 6 years, and I recently completed my degree and ACCA. So I thought, okay, why not? We'll go to Dubai and see. So I came here for a good salary. I didn't negotiate anything. I just attended the interview, and they recognized my ACCA. Mainly, I got the job because I had the ACCA. So they recognized, they gave me a good package. So I came to Dubai. After I'm working there around 1.5 years, and after completing few certification and my master's, currently I'm working in a bank here, a government bank. I'm in the internal audit department. I'm an IT auditor in a government bank, Dubai government bank. And here also I got the opportunity because I have both background, IT and ACCA. So everywhere, like I got recognized because of my ACCA. If I have completed a IT degree, or let's assume another degree in finance or something, I may not got this much of recognition. But just because of ACCA behind me, I'm very thankful. Wherever I go, easily, like I don't need to explain anyone like what I studied. If I say simply I studied ACCA, okay, everyone in the interview or everywhere, they recognize, okay, you are an ACCA accountant. Fine. So this is my story. So I also want to become an accountant. Wanted to become an accountant when I was studying A level, but after that I recognized there are multiple pathway while doing my ACCA, and ACCA didn't put me a barrier like you had to be strictly accountant. Like let's assume if you are doing chartered, like it's saying 3 years you need to work in an audit firm or you need to work in an accounting department. So ACCA didn't put any barrier. Like only 2.5 years I work in the audit department. After that I shifted to IT audit division. But like ACCA giving that freedom, like whichever you want, you can do. You can get the membership. You can become an ACCA accountant. Like so far, it is a relevant job to ACCA. Yeah, it's fine. They are allowing you to do. So this is you have the freedom. You have the international recognition, and you have the flexibility. So this is ACCA. That's it, Sian.
Thank you very much, Kaushik. Like I've told you, Kaushik has been a brand ambassador for ACCA, and he's one of the successful persons picking ACCA. Okay, I'm getting a lot of questions from students. I will answer your questions, but before that, let me also complete what I have with you to share, right? Not only in international careers in Sri Lanka, you take some of the leading companies, you have ACCA qualified people, right? From commercial bank to Hela to Durdens, you have people with the background of ACCA. So finally, right, you've got a really good qualification for you, and you know what to do right after your A levels. You know, ACCA is not only about a professional qualification, right? You also get a degree, a UGC recognized degree comes from Oxford Group University. But I know there's a question that has come, sir. Please tell me if ACC and CIMA are the same. Shian, if you don't mind, can I take these questions quickly? Sir, I need only 2 minutes. If I can finish off these questions, please. Right. Basically, if you are talking about ACCA and CIMA, well, ACCA is the largest accounting and finance body, right? CIMA is not as large as ACCA. ACCA is the biggest and has a history which is longer than CIMA, right? And also, when you're talking about ACCA, since it's the biggest network in the world, wherever you go, you have more ACCA people than CIMA people. So your interviewer can be an ACCA. The potential of being an ACCA is higher than another qualification. Another thing that I have to tell you is CIMA is more into management, but ACCA is more into accounting, finance, investments, management, audit. You have a lot of areas that you can specialize in. ACCA gives you the option to specialize what you want to be. That's why I say ACCA accountants can get into any sectors of the world. What is the average salary of qualified ACCA accountant? Like Kaushik said, in the Middle East, you can easily start with a massive package, more than $500,000 in Middle East. If you're talking in Sri Lanka with your adequate experience, you can start with more than 150,000, right? I'm getting more questions, so let me quickly finish off. If I want to register, how to do it? You can log into Premier Partners, ppim.edu.lk, or you can simply call us on 0777117067. I will also share the number once I'm done. So you got a lot of opportunities, guys, where you can place yourself anywhere in the world. And I know I'm taking a lot of Sir's time, so I'm going to hand it over to Sir Bandara Rajapakse to take it forward. But if you have any queries anytime, you can definitely message us on 0777117067 to everyone. Does our A-level results matter? Well, I wish you all the best with your A-level results. I really want you to do well, but you can start right after your O-levels. One last thing, how much does it cost? Well, it costs less than $1 million, and there's a lot of discounts available at Premier. Handing over to Sir Bandara. So thank you very much, Kaushik and everyone. Thank you for the opportunity.
Okay, thank you very much to all of you. That now we are coming back to our session. Okay, right. Stop that. I think okay now. Okay. Okay, we are coming back to our session after listening that how to do that ACC and what the recognition for ACCA, world recognition and Sri Lankan recognition, the reputed accounting body that. Then here we are. Right. After this example, I will give some hints how to write to examination paper from my previous 26 years experience being a chief examiner of the A-level accounting paper. That okay. Before that, we'll complete this example and then I'll give some hints how to write that. How you organize your answers for the examination. Right. Then here that annual cash flows. Next one is to ask that how to calculate annual cash flows. That right. Continuing same example. That okay. As we calculated these figures, I will take from previous slides. That sales already we have calculated. Since we are taking time, I am not going to take it that here. How to calculate that calculated figure? I import from that slide to here. That 600, 750 in terms of rupee value in thousand. That then salvage value, as someone told that, asked that why we are not taking the salvage one. Now we are taking the salvage value. We have to get it. That means as a cash inflows of the end of the project life. That not only that, we have to take that working capital amount as well, that as a part of the cash inflows. That Then total cash inflows, the first year, only that sales revenue amount, second year was only sales amount, the third year was only sales revenue, and fourth year also same, and fifth year, in addition to that sales revenue, that scrap value 200,000 and working capital introduced at the beginning, since we assume that same amount will be realized at the end of the project. It is 150,000 then. In total, cash flows are 600, 750, 900, 1,080 and 1,430, right? Then cash outflows, that initial investment at the beginning of the project, it is 1 million. Then. So it is 1,000. Working capital investment is 150, that 50,000. Prime cost to be deducted, cash outflows, that means cash outflows in here, that 320, 400, 460, 552, 550. These figures also we calculated in previous slide. I directly import these figures from that slide. Okay, right. That can't you see that screen? Right? Can't you see the screen? Huh? Can't you see the screen there? Okay, I will try it again. Right. What is this? From 600 to KC to me. Scan. Okay, right. Scan, no? Right. Yes, we are here, no? Now, can you see that, no? No one is. Sorry. Where is it? Okay, can. This is can. Okay, right. Here we are in here, no? Yeah. Here, right. The working capital and primary cost is here. Then overhead cost. One other one is overhead cost. Here I take only overhead cost. The total overhead cost is 260,000 as given in example. Out of that 160,000 is 260 is depreciation, which is not cash outflows. Depreciation, as you know, depreciation is not on the cash outflows. This is not the out of pocket cost. Out of the now 260 overhead cost, only out of pocket cost, cash actual cash outflow is 100 only, that not to total 260. Why? It includes 160 depreciation. That now total cash outflows are initial year, 0 year, 1,150, and other remaining years. First year to fifth year is to 420, 500, 560, 652, and 652 respectively. That then net cash goes at the 0 year. 0 year means the date which project is started. That is 1,150. Then first year onwards, 106, 80, 250, 340, 420, and 778 respectively from year 1 to 5th. That the discounting factor we are given in that. Discounting factor. Discounting factor is given in that. Right? Discounting factor in 0 year always we assume that is 1. That means present value of today investment same. Yes. Present value and the investment today is same. So that's why we take the discounting factor as 1. Then after 1 year, the discounting factor is 81. Why? Purchasing power of the money we are receiving at the end of the year should not equal as the amount we spend today. We are receiving cash flows which has less purchasing power than. Less purchasing power. In order to get the present value, though we are receiving that 880, its present value, right, which is equal to what amount or which amount. For that, we have to discount. Discounting factor usually it is given for your examination purpose. If not, we can take, well, not for the examination purpose, your practical work, that's prepared table is given there. Prepared table. If not, using that calculator. The table, when we take that present value PV equal 1 divided by 1 plus R into the power N. This is the formula to calculate the present value, where you know present value is equal 1 divided by 1 plus R into the power N. Then at the end of the first year, if we take that 10%, then 1 divided by 1.1. 1.1 into the power N mean 1. Then value comes, you know that 0.09. Likewise, we may get the discounting factor. That means, since here our example is given 12%, that means 1 divided by 1.12. 1.12. If we take that 2, it's been 20%. That means 1.12 into the power 1. When we take the second year, into the power 2. That when we take the third year, into the power 3, like that means. Then we may get this discounting factor at the end of the first year, 0.089 for the 2 decimal only here given that. If we take that second year, then it's 0.80. If we take a third year, 0.71. That means you know this, how to calculate it. Present value, present value, right? Then this present value of future cash flows we are calculating here after multiplying by using this given or calculated discounting factor. That means then here when we take that net present value, our attempt is to take to net present value. That net present value. Right? Net present value, how we take that? Present value of cash inflows. Present value of cash inflows is 1,318.98. Present value of cash inflows. This amount, that net total 1,318.98. Right? Minus present value of cash outflows. This is the amount, that means present value of cash outflows. Then net present value is how much? This one. Net present value is 168.98. That's the net present value. It is positive. Why? Present value of cash inflows is higher than the present value of cash outflows. That's why it's come positive figure. Then we ask that whether it is advisable to accept that. Yes, we can accept. Why? If the net present value comes positive, can be accepted. That if it is negative figure, then not to not advised to, or not, it is not better to accept that kind of project. But previous two methods we discussed, then is ARR. How we decided whether we have to accept or reject that ARR? If a calculated ARR is higher than the company average cost of capital. So the average cost of capital say that 15%, we have calculated the answer for ARR of our example is 27 point something. So it can be accepted. Why? Our calculated ARR is higher than the cost of capital. This kind of question comes for the multiple choice question as well. That is accepted or rejected rules, criteria of ARR. Payback period. What is accepted or rejected rule of payback period? So once we calculate that payback period, when you have a different project A, B, and C, we say that the project which has shortest period of payback period to be considered. Right? Basically, when you have three projects called A, B, and C, the payback which has project which has payback period is shortest payback period to be selected. If not, only one, we say that one project we are having that. Then we have to compare the calculated answer payback to be compared with the if any standard or norms of the company. If company having some norms, say that even payback period is 2 years, company may decide that there may be standard, any project which is more than 2 years may not be accepted. More than 2 years may not be accepted. So we can't accept that kind. Okay. So once we calculate it, should be compared with the company norms. That kind of simple question may ask for your examination. Sometimes there go multiple choice question that may come. Right. This is up to how to calculate that ARR and payback period and net present value by taking comprehensive, we say that comprehensive example, that is, which is covered every aspect, that is cover every aspect, that net present value is a 3 methods, right? If any question now you can ask before we take next example and some other hints for the examination. If any question you can ask, basic question, if any, then you can ask that. But just we are talking in here, it's not enough. That's happening in this online classes. That is, we are talking in one side, you are in the other end, but there's no communication other than this. Some student may send that chat. That's only that. If you are free to ask any question at any time. Okay. If any basic question, you can ask that. Is it clear? Then right. For the examination point of view, from last year onward, you are allowed to use that calculator. That is good. But most of the students, we realize that what is the problem? You can guess that. So we can directly take that answer. No? We can directly take that answer. Previous you, step by step, you wrote it and got the answer. No? If anyone out of these students, can you say that what are the most possible problems with the using of calculator? Hmm? What is the problem? You are not giving that steps that. If a final answer is correct, then we may allocate full marks. That's true. Okay. If your final answer is correct, we may give that. But if your answer is not correct, our examiners face that difficulty how we can allocate marks. Yes. Always we try to give marks, not to reduce marks. Right? Purpose you are any examiners not going to reduce marks. Then there are genuine problem was that how we can assign marks or if the final answer is not correct. Because previous, if you had that working step by step, then those are the places we can allocate that mark. For many cases, final answer is not given marks. If though we are given marks for the final answer, very minimum amount. If your workings are correct, more marks are assigned to workings. So though you use that calculator, allowed to use that calculator, don't take that direct answer. First you take that step by step. That only facility with that calculator is to get a support for that step by step calculation. If you get the correct answer as a block, that final answer, if it is okay, correct, then we may give that full mark. If you are writing with that tension in the 3 years period, 3 hours period, then there may be possibilities to get some errors. So the previous one of my previous side, there's a typing mistake. One side is correct amount 180, other side is 80. Then that kind of mistakes may be there. You got the, even for the calculator, you got the correct answer, but when you copy into that answer system, you may sometimes you may miss that one figure. That means then if you have that step by step workings, then you will get full answer, full marks. That problem we realized, we identified it last time. So some students lost their marks. If they had the workings, they were easily possibility to earn some more marks. The final answer is not correct, so they use that calculator. So then, since there's no that workings, we are unable to assign that marks. That problem was there, right? So don't forget to don't forget to show your workings clearly. That one asked, Nihal asked that forgotten to look in the method. What is that? I can't understand what you are saying. The other one says ARR. Do we consider net profit after tax or before tax? ARR. We have to get the after tax profit. We have to get after tax profit. In our example, tax amount is not given. That it says that ignore tax. Otherwise, we have to get the after tax profit. Okay? Profit after tax, unless we are specifically given to take the profit before tax. Right? That's the real profit, no? Right? Or that due to certain things that if we take that before net profit before tax, some projects or some companies are exempted from the profit. Then we cannot compare that. We cannot compare that performance of the different project or different business organization. Therefore, much better to take that profit after tax. Right? Other one is I can't understand what he asked that. Forgetting the method. One Nihal asked that. I can't understand what he said that. Nihal Roshan, what do you want to know? What you want to know that you can tell me. Right? No need to type that. If any question you can ask, this is your time, not my time. You are here to get even some small point. They give more chance to get marks. That means, right? That's why I tried to cover that by taking comprehensive example, cover different aspects. All three methods. Okay. Then examination, don't forget that point. Okay. So you are allowed to use that calculator so that point by point. Your final answer may not given much marks. Marks are allocated for step by step. Your examiners, marking examiners are sometimes head up with your answers that your workings are here and there. You have to give some additional amount, additional benefit to mark that question paper, answer script. That that much of sometimes complicated to market here and there. Please, if you work it very properly, clear manner, will be good advantage to you as well. That then other one is that mainly I want to say that the final answer is not given much weight. Okay, way of calculation. Say that our example here. You say that your answer is here 27.5 is not correct. That say that your calculated answer is not correct. But if application is correct, that say that you are here by mistake, you got the 145. We say that 145. Since this answer is not correct, here some mistake here like which I done in here rather than 180. I put 180. Then now my answer is 726. As a result of that, I got then 145 in here. And as a result, my answer is may not be correct. But when you assign marks, we may not worry about this amount. We may not worry about this point, this 27, this final answer. Then see that yes, here the problem is here that 180 problem is here that. Therefore, there as a result of that, he got wrong answer in here. But here when he complete this application is correct, no? 145, say that 145 divided by 600. Then he got the different answer, no? That say that 22.5 that. Then you may give full answer that, full marks that. You may give full marks that. We may not worry about this point. Right? We may not worry about this answer. Since why you got the different answer? Since your point here, this point is not correct. That. But you are applied in correct manner. Since you are applied in correct manner, if you are not given this workings, then you may not be get any marks. That's why the final answer is not correct. The final answer is correct. We say that 5 marks, full marks is given here. Then we may not worry about this calculation. This is not correct. This final answer is not correct. Then we may check this inside of this answer workings. That if you are not given that workings in here, you may get 0 marks here. That's why I told that workings is more important. Show the workings that. Then taking just direct answer using that what call that calculator. Okay, right. That's what I want to say. Last time that problem was there. I think that there's no more question with this example which we discussed. And other one is more or less same question, but that's little bit different. This is little bit different. ABC company, same company. It's planning to replace an existing machine with a new machine, which has now this is a replacement line. There's one existing machine, then the company has intention to replace this existing machine with new one. Therefore, the cash flows may be somewhat different. Cash flows, this example may differ. Right? You may given sometimes there is replacement. This kind of example also possible to get that. Machine which has operating capacity with low operating cost, high operating capacity, low operating cost due to hybrid machine. We say that hybrid machine that operating cost is less low. Then estimations are given below. Market value of new machine is 1.4 million. 1.4 million. Can't you see that? Okay. I see again that there's a problem in here. That means this example, okay. ABC company replace the company's plan to replace that existing machine with new machine. Now you can see, I think, no? Now you can see it. Okay. Now you can see that. That which has high operating capacity with low operating machine. We say that estimations are given below. Market value of the new machine which is going to replace that purchase is 1,400. We drop that 1,000 figures in here. 1,400. Installation cost is 200. Expected life is 5 years with 100,000 scrap value. Additional working capital requirement, beginning of the period, assumed to be introduced at the beginning of the period, 250,000. And market value of an existing machine is 300,000. Market value of the existing machine. If we sold, since we are going to install that new machine, that existing machine to be sold, that no, right? 300. If new machine is installed, annual profit after tax, will increase first and second year by 150,000 and third, fourth and fifth year by 200,000. Expected rate of return is 12%. That's discounting factors are same as previous. Then calculate the ARR, payback period, cash flow, the net cash flow, and net present value method. That okay, net present value. That quickly we will now. Time is near to 9. I'm not. I don't have a problem that we can continue with quickly. We'll try to take this one also. Right? If you like that, if you can wait, no problem to me that. Right? ARR calculation, when we take that profit, increased profit. Here we take that increased profit only, that not total. We are not worried about the total profit, but increased amount of profit. First, second, third, fourth, and fifth year, 150,000, 150, and here after that, thereafter 200,000. Then total is 900. And then annual profit is 900 divided by 5 years, then 108,000. Then average, when we take that average investment, the annual cost of the new machine is 1,400. Installation cost is 200. Sales proceed, that this amount can be reduced, that no need to invest 1,400. Why? Existing machine can be sold for 300. Net investment is one, that means net investment is 1,100. Net investment is 1,100. No need to take that 1,000, invest 1,400. Here 1,100 net investment. Then including this installation cost is 1,300. The scrap value is 100. Scrap value is given 100. Then the average investment is 1,400 divided by 2. It is 700. It is 700. Okay, right. Scrap value, as I told, we discussed in previous. This initial, this one 1,300 plus 100 value divided by 2. So 700 is the average investment. Okay, right. Then ARR is average profit is 180. Average profit is 180. Average investment is 700. As a percentage is 25.71. We say that as a percentage. That is ARR. Here different thing is that the sales proceed of the existing machine, because this is a replacement project. This is a replacement project. Therefore, this existing machine, realizable value of this existing machine to be deducted from the initial investment of this. Right? That's only difference in here. Okay. Right. When we take that payback period also, more or less same to the previous one. Right? Same to the previous one. Net profit that increase here. Incremental profit. We say that one word, you say that incremental profit only. We take that 150, 150, 200, 200, and 200. This is called incremental profit only. We take. Depreciation, annual depreciation as we calculated is 300 per year. That. Then net, when we calculate the net profit, since we reduce the depreciation, in order to get the cash flows, it should be add back. No, it should be add back. This is a non-cash item. It should be added to that net profit. Right? Then 450, 450, and all other 3 years for 100. Then cumulative cash flows are here. We are taking that 450 at the first year, second year 450 plus 450, 900. 900 plus 500 is 1,400. 1,400 plus 500, 9,000, 1,900. 1,900 plus 900, 500 is 2,400. Like that. Cumulative cash flows are taken there. Right. Then payback period is here. Then 2 years and 10 months. How we calculate it? The annual depreciation, way we calculate the annual depreciation also given in here. Annual depreciation, we calculate it 1,600. Why that 1,600? 1,400 plus 200 is 1,600 minus this scrap value 1,100, then 1,500 divided by 5 years lifetime is 300. That means, right? Initial investment is 1,400 plus other installation cost 200, then 1,600 minus scrap value 100, then annual depreciation is calculated. That's the amount we add back to here. Okay, right. Then 10 months how we calculate that. Then that means we have to recover total amount of 1,300. We have to calculate recover 1,300. No, then we take, when we take that in cumulative cash flows, right? Here at the end of the second year, we are able to, when it comes to at the end of the second year, we are able to recover 900. Or total amount to be recovered is 1,300. That to be recovered from this fourth year amount, third year amount, third year amount we have to recover that. Third year amount is 400. 500. Then here up to second year 900 we can recover. 1,300 minus 900 means the amount we recovered at the end of the second year is 900. Then further you have recovered 400 from the third year. Then this out of this 500 cash flows. That means 500 cash flows. Then 400 to be recovered out of this 500 into 12. Then it takes 9.6 month. 9.6 month time it will take. And that 2 years period. Then our payback period is, as you know, 2 years and 10 months. Once we take that approximately amount here, 9.6 means 10 months. That okay. That's the normal way we calculate. Okay. That's also more or less same as the previous example. Right. Other one, how to calculate net present value, that here, net present value. Net present value. Quickly we'll take this one as well. Okay. Cash inflows, as you know previously, we calculated in here 450. If we directly export this one to other side, here we import these figures from the previous slide. 450. Alright, 450 second year, third year 500, fourth year 500, fifth year 500. That means cash flows after tax. Is there no tax? Even after adding depreciation. Even after adding depreciation, cash flows. Cash flows. Okay. Net profit plus net profit after tax plus depreciation, cash flows. Right. Then fifth year, salvage value of the existing asset, we may take that. Not existing, investment. That new machine we purchase at the end of the fifth year, estimated salvage value is 100,000. 100. Okay, right. It is 100. Then working capital investment at the beginning will be assumed it will be realized at the end as 250. Investment will be realized at the end as 250, which we invest at the beginning. Right? Then existing net cash inflows at the 0 year. In addition to that, selling price of the existing machine is 300. Also will be realized. That means we may get that amount at the beginning of the year. Right? At the beginning of the year, 300,000. That means then those are the total cash inflows of this project. Total cash inflows of this project is the 0 year 300. That is the only amount we realize in 0 year selling price of the existing machine. That selling price of the existing machine. That remaining years 450, the 450, 500, year 500, and final year or fifth year 500 plus 100 plus 250 is 850. Then the cash outflows, initial investment or cost of that new machine is 1,400. Installation cost is 200. Working capital investment 250. Here we got as a benefit or cash inflows, right? Then total cash inflows is 1,400 plus 200 plus 200 plus 250 plus is 1,850. Right? Cash, here is no cash outflows in other years. Why? We got here incremental profit. No operating expenses to be deducted from here. Why? Here we got the sales revenue minus all other operating expenses. We deducted that all operating expenses from here. Otherwise, if you take the sales revenue in here, and then that's why you have to deduct it, primary cost and overhead cost, and if there are any other whatever cost incurred to be deducted from here as cash outflows. But here we take directly from the incremental amount of profit, that plus depreciation, then incremental cash flows we take that. So no need to take that other remaining operating expenses to here. Right. Then net cash flow is net cash flows are 1,550. That means 1,850 minus 300. 1,850 minus 300 cash out. The inflows, that is negative value is in the 0 year, it is net cash outflows are 1,550. The remaining years, right, cash flows, the 450, year 450, year 500, year 500, year 850. These are cash inflows. These are cash inflows. These are cash outflows. That's why we put it within bracket there. Right? Then if you write that about examination cash inflows, cash flows, if we without bracket, then it's confused to examiner whether it is cash inflows or outflows. That means, right? Therefore, either minus or bracket to be put that. Remember to write that either minus mark or within bracket to use that. Right. Then discounting factor you normally applied here. Then net present value we can calculate. You know that how to calculate net present value, right? Then there are that net present value of this project is how much? To 370. That means 370. Why? The total of this cash inflows, net present value of cash inflows is 1,920, 1,920, right? Minus cash outflows, present value of cash outflow is 1,550, 1,550. Then net present value is 370. Net present value is 370 figure comes in here. Then it can be accepted why present value is positive. This also asks that examination. You have to give a recommendation. For last time I remember, for this recommendation, 2 marks is allocated there. 2 marks is allocated there. Not only this calculation, positive, once you mark the positive, that's a separate marks is given. Your recommendation, some student did not mention that. Then they lost that 2 marks. Right? Marks is given to here, whether they say that here your calculation is wrong and you got the minus, right? By mistake, or here some due to casting error, calculation, you got the minus mark, minus 370. Then if you write that this project cannot be accepted, it's a minus figure, you cannot accept it. You answer at the examination, you write that project cannot be accepted. That's also you are given full marks for that 2 marks. Why? This though this answer is not correct, your recommendation is correct. No, you written that recommendation according to your answer which you got that. Since you got that minus positive figure, you wrote in here, answered here, project cannot be accepted. Full marks for this point was given that. Right? So you don't worry about the even examination. After examination, you don't get confused that my answer is not correct, that I got the minus, by mistake I put here minus, and then cannot be accepted. You are given that mark in the other. Right? Sometimes they say by mistake you have put in here minus that. Right? Examination is test. No? Then we may see that yes, total of 1920. That is total of this one. Then total of this one 1000. Still you may get the full marks for that. Though you are by mistake you write in here a minus mark. That minus mark you may not given wrong. It's you may get full marks for that also. That much of in a very human ground we mark that. Our examiners mark your papers in very human ground. That. Always they try to give marks, not to reduce that marks. Okay. Now those are some hints how you have to write the examination. You don't get stressed that. Right? Don't get stressed that. You be freely. You can write that examination with calm mind. That what the question asked that to answer. Though some mistakes are there, some calculation errors. Don't worry that much, because that even after examination you may not take the mark, assign marks to the final answer. I think all these things you know, instructors and teachers are given this kind of instruction and we classes that. Right? Then those are the things I want to tell them. Though you use that calculator, show your calculation is step by step. Then. Okay. Right. Any question now you can ask that. Any question you can ask as a part of this 2 example which we discussed, or anything you can ask that. Right? Anything that? Any question you want to ask that? Yes, my dear, that if no question is, you can ask it, still you can ask that. I'm not hurry. I'm at home, like you. Right? Okay, wish you all the best for your examination. A-level examination 2021, though it is in 2022. It is in the 21 examination. No? I wish all the best, very best for your future. That. Right? Hope that.
Thank you very much, sir.
Hope that you may get good marks. That. Last time you believe that one is students, I saw in now my panel, there's about 98 marks. I hope, I wish to get good marks as much as possible. Okay, and with A pass and try to come to our university, Colombo University, management faculty. Okay. If you come to management faculty of Colombo University, you need 3 years, huh? Right? Highly competitive now. Okay. So the best to all of you. Any question still you can ask. If not, that you can take my number from the that organizers, and or if not, note 71 99 55 840. Right? Note 71 99 55 840. At any time you can call, right? Okay, thank you very much. Good night to all. Show the best.
Thank you very much, sir.
Okay.
So it was a great session. So for the discussion of the investment appraisal chapter, right? So we will also have few more sessions before your exams. So thank you very much for the support given by the Education Ministry and also the Colombo Zonal Education and our sponsor. Special thanks goes to the sponsor, Premier Partners and ACCA Institute. And so we will see you in the next session. So tomorrow we have a business studies session in the morning by Professor Tamara. So you can join. We will be sending the links and the lecture materials through email, and also you will be getting the link through SMS as well. Thank you very much and good night to all.
Good night to all. Right. Shall I move now? Okay. Right.
Yes, thank you.
Do you want a career with limitless opportunities? Our qualifications and skills are in demand and the key to unlocking your future success. By studying with ACCA, you could have a finance career that can take you in any direction, no matter your starting point. You could open the door to millions of exciting new jobs and gain a passport to a whole world of possibilities. We'll equip you with the work-ready skills needed to thrive in a fast-changing digital landscape, which is why employers trust us. At ACCA, we understand everyone has a different journey to success, which is why some of your existing qualifications could count towards your ACCA exams. You'll also have the opportunity to gain additional qualifications such as a degree or master's from one of our many partners, meaning you can gain 2 leading qualifications at the same time. And because we know everyone has different commitments and lifestyles, there are flexible study options available, so you can go at a time and pace that suits you. With ACCA, you're never alone. You'll be part of a global network of over 500,000 students and 200,000 members. So what are you waiting for? Give your career the ultimate flying start with the business qualification that takes you where you want to go.
The great thing about ACCA is that students can join in from a wide variety of backgrounds, be it medical, engineering, IT, or legal. I myself come from an engineering background, and I felt at home starting ACCA because ACCA takes a gradual step, starting off with its foundations, getting the basics right, moving on to skills, and finally the professionals level, where you exit as a fully qualified accountant. The way I see it, all potential candidates have the ability to be island and world prize winners. I mean, if I can do it, so can you. All you need is a little bit of passion and some determination, and you can see it through. One tip to students that I personally believe is that you need to persevere throughout the end. I know the journey gets really hard, especially towards the latter part of the program, but don't give up because the end result is entirely worth it.